Hello, welcome to the first of a series of short videos I'm going to make about gold, silver, and how to survive financial Armageddon. Since I'm going to be making these videos daily, I'm going to keep them short and sweet, and they're going to be very informal, just about topics either that I've recently discussed with colleagues or items, relevant items that have been in the news recently. So I'm going to post these videos first to my website, and then after a couple days, I'll post them to my YouTube video channel. So if you want to see them as timely as possible, today is September 11th, 2012. Please check out my media page on my website at www.smartknowledgeu.com. Okay, today I'm going to talk about uh, basically the way the general masses have still, by and large, overlooked the value of gold and silver and the necessity, actually, I would say, of owning physical gold and physical silver as this global monetary crisis deepens. To me, it's still amazing that the majority, I would say this, doesn't apply to everyone. I'm sure there are many of you watching this video to whom it won't apply, but um, generally speaking, the majority of people are still way, way asleep when it comes to owning physical gold and physical silver. Um, Furthermore, there are still a lot of people that own physical gold or own gold and silver, I should say, that opt to own gold and silver through paper derivatives, which again is a huge, huge mistake. Because if you look at the monetary crisis, it's the fact that central banks are printing our fiat currency into worthlessness, and that's what's giving gold and silver its value. So why would you want paper contracts that are backed by a fraction of the value and physical that they're selling, as far as the value of the paper that they're selling? It just doesn't make any sense. So it's just another way that bankers are perpetuating fraud by giving you something paper for something tangible and real in value like precious metals. So, what you really want to own in this case is physical gold and physical silver. The other thing I really can't see is that people really underestimating risk because they do not understand the fraud that's perpetuated by the commercial banking industry, by central banks, by the commercial investment industry. I'm still meeting people out there, colleagues in the investment industry, that are telling me, oh, how great this stock market is. Um, when I say, hey, if you look at silver's gains for the past 11 years, they've been phenomenal, from $4 to an ounce to $33 an ounce. And they say, hey, but what about Apple? And my response to that is, of course, Apple has been a great, innovative company, and their stock has soared as well over the last decade. But the problem is when you look at the risk, Apple right now constitutes 20%, although it's only one of 100 companies on the NASDAQ 100. Right now, their weight comprises 20% of the NASDAQ 100 index. So that's ridiculous. If you're looking at indices and trying to determine if they're healthy right now, you need to look at basically how few companies comprise the majority of that weight. Not only majority of the weight, but even when you look at the S&P 500 for the past 4 years since the crisis really manifested itself in 2008, you'll find just a handful of companies sometimes that comprise 25%, 35%, 45% of the entire daily trading volume. And that is definitely fraudulent. That means that these companies are being propped up by HFT algorithms, high frequency trading algorithms. And also, when you look at the volume today, you have record low daily trading volumes. So when I point out some of these factors to some of my friends that are just, cheerleading regarding the regular stock market and stock market indices, a lot of them don't even know that daily trading volume is a record low right now. A lot of them don't even know what HFT is. They say, what's HFT? How can you not know what high frequency trading algorithms are when all you have, is basically Skynet controlling the direction of a lot of the major, global stock market indexes today. So, the problem is not that people look at only the surface level, and that's what they think. That's how they think they could determine the health of the stock market or the health of the economy. And they don't bother to look underneath the surface to see what the real facts are, and to determine, whether certain stocks and stock market indexes are way overblown right now. And I would say they're distorted because they're being ramped up basically by these computer algorithms on record low trading volumes every day. So, rather than recognizing that there's massive risk because these a lot of the stocks trading in the um, overall stock market indexes like the S&P 500 or the FTSE 100 or um, the Nasdaq 100 are distorted. They think that this rise is going to go in perpetuity. And rather than looking at gold and silver, understanding that these prices have been suppressed for so long by the banking cartel. So actually their upside is still tremendous. That's a whole different risk reward paradigm. You have gold and silver that still have a tremendous risk reward paradigm in place, and you have the stock markets, which I see is very high risk, low reward at this point. Okay, so that's my point today, and we'll come back at you again tomorrow with a new video. Okay, until then, take care.